Ladies and gentlemen, settle down. We are ready for our final set of presentations and session coming up. Everyone, after this amazing, I hope all of you went out and had the live chai from the counter. These amazing breaks have been brought to us by AMS Bullion. Right now, we have our next speaker ready. This is pretty much the final individual presentation of ISC 2024. And our speaker is Mr. Joseph Stefans. Mr. Joseph Stefans will be talking about silver in investment portfolios. Mr. Stefans is the group head of trading for MKS PAMP, and as a head of trading since 2019, he leads a global team of traders to manage the price and liquidity risk within the group, along with pricing support 24/7. With over 15 years of industry experience, Joe has held various roles starting in operations in New York and later in London, where he oversaw EMEA Metals trading in 2016. He serves on the LBMA Public Affairs Committee since 2015 and is a member of LPPM Management Committee since 2022. Ladies and gentlemen, talking about silver as an investment, talking about silver as a part of everyone's portfolio, I'm sure that this is going to be a very, very interesting talk. Everyone, ears on as I invite on stage Mr. Joseph Stefans. Let's give him a round of applause, everyone.
Hello, everyone. First off, I just want to thank the organizers of the conference for allowing me this opportunity to speak today about silver investment. I'll be honest, I'm probably going to also invest in some linen suits after this trip to India coming in summer. It is a bit warm here, unexpectedly so from my part. But so just to kind of give you a brief background, I run trading for MKS PAMP. I've been with that group for 4.5 years. Before that, I was at one of the bigger bullion banks in London, looking after their trading business. So I've been around precious metals trading in the international markets for the last 20 years. And silver has been something that's always been near and dear to my heart. We're big believers in it at MKS PAMP in terms of its future for a variety of reasons, and I'll go through those today. So I'm going to talk through three different things in terms of, I'm going to talk about the attributes that we see in the silver market, why one would have silver as part of their overall portfolio, the types of investment you can do in the silver space, especially in the international market. We all know about the physical space, but there's obviously ETFs and digital products out there as well. And then I'll end with a short trading strategy, which is more for the short-term speculative crowd, and it's a common kind of structure that we see in the international market that might be of interest to you and your groups. So, at present, one must look at, when we look at silver, one must look at the historical parallels to gold, obviously. At present, the gold price continues to move up, and it's probably the beginning of a new secular bull cycle in the gold market. The lack of faith in both government and central banks grows each year. So some of the gold parallels that I've mentioned here are de-dollarization, debt monetization, and big ambiguous monetary policy, and real yields at huge negatives in many countries. I know everybody fixates on the US and the Western world where real yields are positive, but obviously, we are a global marketplace, silver is a global marketplace, and real yields are deeply negative in many, many different jurisdictions around the world. In addition to that, silver also has the industrial story, something that obviously a number of you have spoken about over the last 24 hours. The photovoltaic industry, the 5G industry, the EV industry, just to name a few, are requiring a huge amount of consumption today in the silver space. The estimates are around an increase of 8 to 10% from the industrial side per year, with that number continuing to grow as these technologies continue to evolve. So silver has two different kind of stories behind it. And as well as, I'm pointing out the gold and silver ratio here as well, because, gold obviously has had a run. We know why it's had a run in terms of some of the things that I've mentioned here. And silver in gold terms is actually historically very, very cheap. Even though it's come off its highs of 120, At 85, when you look at the last 25 years of this ratio, historically speaking, silver is extremely, extremely cheap compared to gold. So we think that there's obviously a huge, huge room for the upside, especially if you continue to believe in the gold story. With these two primary drivers, the industrial side as well as some of the parallels to gold, you know, our head of strategic research, Nikki Shields, believes that silver can reach a high of $30 this year. I couldn't agree more. I think, you know, over the next 2 or 3 years, 35 or 40 are not unlikely new territories for silver. I think somebody mentioned it earlier today. You know, we're going to see higher lows and higher highs as we continue to progress year in and year out. So in terms of investment in the international market, there's many avenues for those to invest. ETFs have always provided one of those easy ways for the everyday investor to have exposure to the precious metal space. You know, the launch of the gold and silver ETFs were huge game changers for the precious metals marketplace worldwide. It, you know, removed a huge amount in terms of barriers of entry for the everyday investor, especially in the Western world, in order to take exposure in the precious metal space. We've seen it with the growth of the silver ETF, you know, printing up to a high of AUM of 1.1 billion ounces in somewhere around early 2021, and we've seen a retreat from that space. We've also have a number of digital products that have been created where you have physical backing from the silver, from the physical silver. However, you know, these products, ETFs obviously have momentum behind them. I know India here, there's an ETF that's been recently created, which there's a huge amount of momentum behind. But I still feel that the market today is ripe for physical investment. I think the rest of the world is kind of catching up with what the Indians have known for centuries, which is, you know, physical is king. If you look at the quote from my CEO, Marwan Shikarchi, he says, "In all my experience, I've not seen such dynamic physical markets, and we support developing and broadening out access to new precious metals participants." And the reason I lay this out is I think, you know, in this world of uncertainty that we live in, hard assets are becoming the one true haven that people can trust. They can't trust government, they can't trust central banks, so they put their money into things like gold and silver. I think, you know, these charts talk about that, you know, that diversification out of paper products like ETFs, even though that they're physically backed, and into physical investment. You've seen the ETFs come off nearly 400 million ounces over the last 2 or 3 years, and you've seen physical investment go up by 140 million ounces, obviously at its peak in 2022, and obviously it's come off since then. But I think it gives a good trend in terms of where the mindset is of investors today. In addition, you know, to highlight the physical demand, especially in the silver marketplace, I've given 3 kind of charts here in terms of the major depositories around the globe. So here you see London, which is obviously the kind of the final marketplace for most silver that's unconsumed by the direct consumer. And then you have New York marketplace here, the CME. And you see, and the trend is clear. The silver stockpiles in London have dropped by nearly 300 million ounces from their peak. The New York registered stocks have dropped by nearly 80 million ounces, again, in the last 2 to 3 years. So it clearly tells you something. It tells you that there is physical silver being consumed. Now, it's being consumed by 2 different markets. It's the investment market as well as the industrial market. But it tells you everything about where the marketplace is going for silver demand, and that should tell you a lot about what the price of silver is going to do over the next 3, 5, 10 years. I've also highlighted here the SGE premium, which gives you a good idea of the supply-demand dynamics in China. So the premium obviously had been quite low up to about 2, 3 years ago, and has since rebounded, you know, at some points printing above 3. That $3 level basically being the level where the equivalent of DAT is for silver imports into China. So that's something to really keep an eye on, because at the end of the day, China tends to export somewhere between 3,000 and 4,000 tons of silver a year. If they start to become net importers, that's going to have huge ramifications for the marketplace going forward. So it's something to really keep an eye on, and it could be a key inflection point in terms of where we see supply and demand fundamentals going forward. Nope. So, to sum up, from my standpoint, I think, all of these products are great. Digital products are great. I think that there is a huge amount of room for these products to grow and have, a place in our market in the future. But for me, at this particular moment in time, nothing is more secure than physical investment. Lastly, I was asked to kind of talk about some of the short-term trading structures that we're seeing in the international marketplace. As we know, I kind of talking about silver here as a medium to longer term investment, very much like gold, but as we know that silver is rife with volatility and short-term speculation. So there's a structure that we tend to see in our marketplace, in the international marketplace, which kind of is a common structure, mostly done by a lot of private banks who want to have underlying exposure to silver, but also want to eliminate some of the things like the carry costs, given it's a zero yielding asset, as well as some of those huge price appreciations that we see when it comes to something as volatile as silver. So basically, the short-term strategy essentially is they basically buy silver, the underlying silver at $27, and then they would sell a corresponding call, which is called a covered call strategy, to earn a bit of premium while they're sitting on their underlying silver. This helps to subsidize not only their carry costs, but in addition, if they don't trigger the $30 strike in the next 3 months, then they're also able to kind of lower their entry cost as time moves on and as they continue to enter into these structures. They're fantastic structures if you're in a range-bound market, which we have seen in silver over the last 2-3 years, where 19, 20 to 25, 26 area is kind of where we stuck. But they're not great structures if you think that silver is going to break out, because the problem is that you're capping your upside. So it's something that is very, very commonplace, as I said, in the short-term speculative trading, and it's something that we continue to provide liquidity for some of our customers as they look, especially some of the Western customers look to subsidize their carry costs, because that's kind of the biggest challenge when it comes to precious metals investment today. So to wrap up, and it's something actually that I should mention in terms of the physical investment. We've seen it in gold, and we started to see it in silver, but the Western marketplace is one that, and I showed it in an earlier graph, is one that typically didn't buy physical material. You've seen it with, in the previous slide, with their investment in small bars and coins in 2019 and 2020. That's changing. Their mindset is changing. There's our strategist did a huge piece recently on what's called the Costco effect. I don't know if you guys have seen in the press, but Costco, which is a huge retailer, someone who has over 100 million customers, is now selling gold and silver in their stores. And not only that, they're selling out in a lot of instances. So it's telling you something. It's telling you that the investor is heavily concerned with the future. And that's not only the U.S. investor, it's the Canadian investor, it's the UK investor, it's the Japanese investor. It's everywhere in the world, given where we see physical demand. So for me, silver is going to continue to remain very well bid. There's a huge growth story behind it from the industrial side, but we also like it in terms of the investment kind of qualities that it has going forward. And it's one that I think, as I said in the beginning, it's amazing to see what the Indians already know, that physical is king, and it will continue to be king in the foreseeable future. So thank you very much. Happy to take any questions if you have time.
Any questions?
Jisha, can I just read that and take this?
Yes,
Sure.
please.
So what should be the proportion of silver in an investment portfolio? It's a great question. It'll be lower than gold. Obviously, gold is more strategic. So if you look at having gold as between 5 and 10% of your portfolio, I would say silver, you're probably going to want to be more towards, I would say 3 to 5%. You know, the problem with silver is that it is heavily volatile, and if you're somebody, it depends on the investment approach that you have. If you're an investor, for me, actually I would be allocating a larger percentage than that because I'm not really worried about, you know, the short-term noise from week to week, month to month, year to year. My firm belief is that silver is going to trade much higher, possibly double from where we are now. If you're a short-term investor, then I would have the allocation be a lot lower, just due to the overall volatile nature of the underlying. While India's been a buyer for physical retail level exit comes at a high cost. How's it grow? That's another good question. It is, I think retail in general, which is why it's something that, you know, we've continued to look at. And retail in general there's high entry and high exit cost. It doesn't matter if it's gold or it doesn't matter if it's silver or gold. Unfortunately, that's just the nature of the market. I think the market is seeing a huge influx of additional participants in that space, which should only help to make some of those margins be compressed. So I think, yes, the entry and exit levels are quite high, but I think that those are only going to narrow as time goes on and there's more and more people in this space. It'll help to make it a much more competitive landscape, and it will reduce that margin on entry and exit going forward as years progress.
Well, I think that concludes this presentation, everyone. Can we have a round of applause for Mr. Stefan? I would like to invite from StoneX, Mr. Amar Singh, to present a memento to Mr. Stefan for his time on the stage. I think one of the briefest presentations of the conference, and yet with huge takeaways. I'm sure a lot of you are already making up your minds about what to do. Let's have you in the middle of the stage, gentlemen. Better pictures, sir. The lighting is perfectly propped for that.